Hey folks, Toby Mathis here, and today I wanted to go over a new law under Trump's One Big Beautiful Bill Act that could absolutely hammer the town I live in, which is Las Vegas, as well as all the professional gamblers and grinders out there. They can get nailed. So if you're a sports bettor, poker pro, or casual sports bettor, listen up. The tax landscape for gamblers just changed in a huge way, and it could cost you thousands in taxes, even if you break even. Today, we're breaking down the new 90% wagering loss limitation under the One Big Beautiful Bill Act, which goes into effect January 1st, 2026. So it's not this year, it's next year. And yes, I've got real examples to walk you through so you understand the impact. So let's dive in. Before this new law, professional gamblers could deduct 100% of their gambling losses and business expenses. But this is a big caveat, as long as it didn't exceed their winnings. I've done reaction videos before on those social media tax influencers telling people to do weird things like collect lottery receipts to write that off against your income. That does not work because the current law does not allow losses. It's capped at winnings. But the One Big Beautiful Bill Act changes all of that and appears to be a sucker punch added to the last minute to show a gain in revenue to offset the other tax deductions in the bill. What does it say? Well, it's section 70114, if you want to go look at it, and it says extension and modification of limitation on wagering losses. And what this does is the new law amends section 165 by adding something for purposes of losses from wagering transaction, the amount allowed as a deduction for any taxable year shall be equal to 90% of the amount of such losses during such taxable year, and shall be allowed only to the extent the gains from such transactions during such taxable year. So what does that mean? Well, it means that we are going to be limited to the deduction of losses to 90%. Of those losses. You have a $100,000 loss, it's only $90,000 that you could use against your winnings. Now, for those of you guys that are professional gamblers, there's a special provision that they added that says losses from wagering transaction includes deductions as well. So this is really a punch to all the professional gamblers out there that deduct their expenses. And what does this mean really in English? It means that starting in 2026, you can only deduct 90% of your combined losses and expenses, even if you're a full-time professional who logs everything. So what does this change really do, and who does it apply to? Well, anybody, like your casual gamblers, your professional gamblers, and yes, the business expenses for those professional gamblers count towards that 90% limit. So if you win big but spend big, the IRS might still tax you on phantom income. This is crazy, right? Money you never actually received and profits that you didn't actually receive. That could be huge. So let's go over some examples. So let's say you're a professional gambler and you had a monster year. You had $2 million in winnings versus $1.9 million in gambling losses. It's like you should be up $100,000, right? But let's say you also had $100,000 in business expenses. You traveled, your software, your office setup, everything. So your total losses and expenses equals $2 million. So I made the $2 million and I had $2 million of expenses. So under the old law, you would deduct the full amount, so your taxable income would equal zero. But under the new law, you can only deduct 90% of that $2 million. So those $2 million of expenses and your actual losses is $1.8 million. So the IRS says, hey, looks like you made $200,000 in profit, even though you actually made zero. That's $200,000 in phantom income that you now owe taxes on. What? Yep, you owe taxes on $200,000, even though you broke even. Well, what about the casual gambler? Like maybe you're a sports bettor who plays the major games or plays a certain sport, right? Hey, I like betting on basketball, whatever. You're not balling out there with seven figures, but you're grinding on a daily basis. We got a ton of those in my town, right? Let's just say that you had $200,000 in total winnings. You had $180,000 in gambling losses, and you had some legitimate business expenses of $20,000. So the total cost would be $200,000. So again, typically it would be break even. Hey, I don't owe tax because I didn't make any money. But under the new rule, you can only deduct 90% of that $200,000 or $180,000. So since you won $200,000, but you can only deduct $180,000, the IRS says, congratulations, you made $20,000. Time to pay up, even though you didn't keep a dime in profit. But what if you're just a real casual player? You simply go to the casino once in a while and you like to gamble. Maybe you're a poker player. Maybe you like video poker. I know a lot of those folks too. You gamble, and this sounds weird, right? You say winnings of $10,000. That's cumulative. Like I could do that a lot of people do that in a night, right? So let's just say you gamble and have winnings of $10,000. Well, and maybe you broke even, so you had losses of $10,000. So I put a lot of money through the machines, but I didn't make anything. The IRS looks at that as though you made $10,000 and you lost $10,000. Well, at least you got a free drink, right? Nope. Your losses are still limited to 90%. So you're only going to get to offset $9,000 against your $10,000 in winnings. You still owe tax on $1,000. Well, that's annoying, right? Right. So this rule doesn't just hit the big whales. It punishes everyone from the casual gamblers to people who treat gambling like a business. And it goes against the core idea that you only pay tax on net income, not gross. So lawmakers in my state like Dina Titus and Catherine Cortez Mastro are trying to undo this. They actually had the Fair Bet Act, and the American Gambling Association is pushing back, but it's been to no avail, right? Unless Congress changes the rule, this 90% cap is here to stay, at least for now. So here's what you should do before 2026 hits. Number one, track your expenses religiously. Know your cost basis. Again, if you're using a player's card and things like that, they'll generally give that to you. If you're playing poker, it's a little bit tougher. I don't know if I would ever consider doing a corporation, things like that, if you're a professional, but it might be time to look and explore some of those ideas. It really comes down to talking to a tax advisor and not waiting until after you've filed your tax return. So again, this takes effect next year. You'll be filing those taxes in 2027. Do not wait until 2027 to address this. And you got to have some sort of plan for this phantom income, because even if you're close to break even, you may still have a huge chunk of tax to pay. It's one of these weird things that they threw in there that they assume, and when I say they, Congress thinks is going to create a bunch of revenue to offset the expenses of the one big beautiful bill. Don't assume that breaking even equals no taxes. The One Big Beautiful Bill Act changed a lot, and if you're in the gambling world, this is one rule that could redefine your entire strategy. Now, if you guys could do me a favor, besides like and subscribe, drop a comment. Are you affected by this, and what do you think? A lot of people might say, if you're gambling, then I have no sympathy for you. But there are a lot of people that gamble in this country. Everything from doing the lotteries to being a poker player, online poker player, going down to the local casinos, etc. This affects a lot of people. If you know anybody that this affects, share it with them. So like, subscribe, and share this with anyone who bets professionally or semi-professionally or even casually. If you know that they gamble a little bit, you got to make them aware, because they need to know before it's too late, before they walk in and make a big mistake of, oh my gosh, I thought I was doing something that was fun. I did not realize that this fun activity that I'm breaking even on, maybe a little bit of loss, is now going to cause me a taxable hit because I only get to use a portion of that loss. Anyway, I'll see you again next time.